You're listening to the Multifamily Journey Podcast. In this show, you'll hear industry experts share tips of success and failure from their real estate investing journeys. You'll get a transparent look behind the curtain while you learn to fulfill the lifestyle you want to live and achieve your wealth goals. Get ready for the journey to financial freedom through investing in multifamily real estate. Here's your host, Blake Dailey.
Hey everybody, we got another fantastic episode today of the Multifamily Journey Podcast. I think today was such a solid episode because we had on a solid investor and person and just solid in physical stature. We joke about how we're both ex-college football players and bounce off a little bit. We both played at Colorado school, so you get to hear a little bit about that. Today, Samson Jagoras joins me on the show. Samson is currently the president of Growthview Properties, and he has extensive business, executive leadership, and entrepreneurship experience. He's currently on the executive leadership team at Madwire, an Inc. 500 marketing and technology company located in Fort Collins, Colorado, where he, his wife, and his two children currently live. So at Madwire, Samson built the company from just over $7 million in revenue to over $100 million, and from a handful of employees to over 600 employees in just 10 years. And he also built several departments within the companies, consulted thousands of businesses, and hired hundreds of people. So ton of experience with putting teams together, organizational structure. And that's really his superpower, which we talk about today on the show, is organizing teams, putting together the systems and processes that make everybody successful together. And I think you're going to get a lot out of it. We talk about why multifamily, why now, the first time that we got to dive into COVID and the impact that's had on buyers, and also in the marketplace with value add multifamily. And finally, we wrap the show up with talking about building your brand, whether it's to reach investors or get out there in front of more people or have an impact. It all starts with your personal brand and, having transparency and just being a good person, being a good steward. And that really capped the episode off. I think today is a great show, really good value. Every time I talk to Samson, I feel like I learned something new. So hope the listeners today do as well. So without further ado, let's get into the show. All right, Samson, welcome to the Multifamily Journey Podcast, man. Thanks for joining. Glad to have you here.
Man, I'm pumped. Thanks for having me on.
Yeah, of course. Glad to have you. So let's just pick this thing up and give people a little bit about your background, how you got started in real estate.
Yeah, so for me, the story starts in 2008. I actually went to school, got a degree in human physiology, and walked out of school on a Friday and then walked into a commodities brokerage on a Monday where I was trading highly leveraged futures and commodities. I was about 3 months into my career when on September 29th, 2008, the Dow Jones fell 777 points in a single day to set off the economic housing crisis. Obviously, it was going long before that, but that was kind of what unwound the stock market. So I got baptized very quickly into the world of investing, into the world of leverage, and saw people take their accounts from $25,000 to $1 million and $1 million back down to $25,000. So the draw for me to real estate was really just the hard asset, right? The safety and consistency that comes along with a place to live. And it wasn't nearly as volatile when you look, statistically speaking, at the Sharpe ratio on futures, which is the relative risk to reward ratio. And you compare that with real estate. I mean, it doesn't even come close. The odds of you long-term being successful in futures and commodities is pretty much zero. Like, the only way to be successful in that game is if you are a producer like crude oil, or you mine gold, or you farm corn, or you ranch cows or something like that. Most of those, that's what it was created for, was to hedge that. So I'm incredibly risk averse, conservative in everything that I do in my approach as it relates to investing. I like things that are evergreen. I like things that drive safe and consistent returns, and I like things that are capital efficient. And so, leveraging other people's money, leveraging debt, and parlaying that into a property and having somebody else pay off that loan to me is incredibly capital efficient. And, historically, other than 2008, real estate has held up exceptionally well during most economic downturns. So,
Yeah, absolutely. Definitely a crude start to your investing career, it sounds like, but that's what draws me to real estate is the same, that the saying goes, people always need a place to live. And it's so true when you break it down like that. Getting started, what was your first step in real estate, and how'd you get started with investing in it?
Honestly, it was just a self-study. I had enough knowledge just from trading and, being a stocks and commodities trader to just understand the power of leverage and playing the market. And so when 2008 hit, I didn't really have a lot to lose. So I was looking at ways to kind of get into our first home. And so we started by, just buying our first home, ultimately is how we got into it. And then the market continued to climb. And I told my wife, Casey, that, if our house ever appreciates, like I think it's going to, like, we're going to sell it. Like, this thing's just an asset. I don't care. So we did that. We moved into another home, and sure enough, the market kept screaming. So we took out a HELOC. And then from there, that kind of started the party on our very first property we bought was a single family that had a separate entrance that was zoned multifamily that we converted to a duplex.
Oh, that's awesome. What a good first property, get the extra income. Nicole and I, my wife, we did a very similar strategy with, basically having that second unit. So that's awesome to see that, your primary residence can be a good investment to get started in. And was that in Colorado when you got started, when bought the first house out there? Okay.
Yeah. So we've been in Colorado the whole time in terms of where we lived. So whenever we buy a house for us to live in personally, we're always looking for a way to add value to it. We've been doing that for the last 10 years, playing that tax loophole where if your revenue off of that or your profits off of that are less than 500,000, that you don't actually have to pay capital gains. So we've just been trading up every 2 years and then taking equity out and buying, small single families, townhomes, multifamilies, et cetera.
Yeah, that's great, and that market definitely has been a good one over the last couple of years since the recession. I know when I was out in Colorado Springs, it was still going like crazy, hard to find.
Yeah, Colorado Springs is blowing up like crazy now.
Yeah, the whole Front Range out there is is literally like burning right now. We were just talking about it before we jumped on here. It's literally on fire.
Yeah,
With all the wildfires.
It's also snowing here.
Yeah,
it's
also
September
snowing. That's what he's wearing the cardigan, and I'm in a t-shirt because it's 90 and humid here in Florida right now. So definitely don't envy the Colorado winters anymore. But yeah, that's a really good start with starting residential and a small multifamily, and now getting into bigger multifamily. I don't know if I've asked anybody this yet, but what gets you excited about real estate investing? Because I know a lot of times when we talk offline, we're all like super jazzed, like so ready to get that next property. So what about it, about real estate, gets you amped up about it?
There's a couple things. So I grew up, in a blue collar family where my dad he's an incredible woodworker and carpenter. And he would work on these just phenomenal homes. I mean, very, very affluent people, like the CEO of Robinson's May. You're too young. You probably wouldn't know what Robinson's May is, but it's like JCPenney's, Macy's. We lived in Los Angeles. So, he's working on movie stars' homes and musicians' homes. And then our house that we lived in, my dad didn't own a home until he was, probably almost 40, 45 maybe. So for somebody who grew up in that environment, like the appeal of just housing is something that's attractive to me. Like home is something that's incredibly important to me. And buying real estate and creating a nice piece of real estate for somebody else to live in, I really enjoy that part of it. And then there's also just the benefit of it as an asset class. I mean, it's a very predictable business, is what I would say. You can see a lot of the risks going into the trade. And one thing I know about being a stock trader is the successful traders always know what they're willing to risk before they get into the deal, and they always know what their exit strategy is. That's so simple in real estate, and And so if you got half of a brain, you can be successful doing that. But I love bringing the deal together. I love finding the deal. I love finding the debt, finding the equity, and pairing all those things up. The hustle of it, it's a lot of fun to me. And so as a guy who grew up moving around a lot as a kid, not having a home, being in real estate is somewhere where I'd love to be. So
Yeah, it's like what you're mentioning there is like the hunt, it's like the chase. I think I'm the same way. I think it's the athlete in both of us, right? We just want to like go out there and compete, and find the best deals and find the best financing. That's the approach I take on it. And me and you've talked about this, but Samson played fullback at Boulder, right?
University of Colorado. Yep.
University of Colorado. And
right there,
yeah, right there. And I played linebacker at the Air Force Academy. So, rivals in Colorado, but, we'd be on the opposite sides of the ball, but the mentality is the same, right? Just like go out there and get after it. So I think there's a lot of commonality in how we approach it. And that's definitely what excites me about it. So
I like the negotiation piece too. I think that's a lot of fun. We walked an 8-plex yesterday.
Mm-hmm.
That is 1946. And, I think for the price that they're asking, it's pretty insane. Granted, they're willing to do seller financing, which is awesome. But the CapEx on that thing is heavy. There's a lot of deferred maintenance that has not gone on. And so, that part of being able to like walk through and have a strong pro forma and know your numbers and be able to use that as a bargaining chip against, this other investor to say, I get your price. It makes a lot of sense on a price per square foot, but that's not a comp. Like, let's look at what the capitalization rate is and what the deferred maintenance is.
Yep.
Let's base it off of that and try to strike a deal, right? It's always about making a win-win, but like within reason,
Yeah. There's definitely some good things packed just in that little segment. I was talking, it's like you just represented like a mirror image of a deal I was talking about another buddy with. He's looking at buying a 8-unit in Texas and big capital expenditures and looking to do seller financing to make the deal look a little bit sweeter for him. And you're doing the same thing. Can you touch on why seller financing would help that deal for other people to kind of put a tool in their toolbox when out looking for deals?
Yeah. I mean, every deal, there's really like two components. You got to have the debt and you got to have the equity. On some properties, it takes a lot of work to go and find the debt, or you might not have the debt to income to support it from a conventional loan, or you don't have the private money investor to come in. In this case, it was, somewhere in the realm of like $850,000 to $1 million to come in and actually do that. So when the property's owned outright, essentially that can be collateralized via the owner, and they can, give you a loan against that so that you can come in and put a down payment usually somewhere in the realm of, let's call it 10% is pretty common. And then you give them interest, and that allows you to step into this property without having to come up with $1 million or being throttled through conventional lending. And you can go find an equity partner to step in with you. If you know the property is going to be, worth, in this case, every unit is under rented to the market. So if we come in and we step in and we actually add, a little bit of, paint to the outside, we add some color to the inside of the rooms and dress them up, we can probably raise the rents like $500 a door.
Oh,
so
wow.
Knowing that, we could, instantly get some equity out of it and then refinance the property once it's, the capital expenditures have been done, the deferred maintenance has been taken care of, and it's leased up. So it's just a creative strategy to real estate that most people aren't aware of. I think the current understanding that most people have is they have to get a loan. Yep. And they have to come up with their own down payment. Money doesn't necessarily flow to a good deal. It flows to knowledge and competence. So if you study the game, you're educated, you understand the debt, you understand the equity part, and you know how to put the deal together, and you can show that to people, there's a lot of money to be had. Seller financing is like one of my favorite tools. And on an 8-plex, like most people would think like, there's no way, but it's really $900,000. It's $90,000. So if you have a partner, it's $45,000 a piece for the down payment. And if you can split the spread between what the rents are and what the what the interest rate is, it makes a ton of sense. Why would somebody do that? In this case, this guy's older and he is more interested in the cash flow than he is with the big payoff.
There is no better asset class for building wealth than real estate. And in most instances, people don't have the time or energy to invest in it on their own. So how do you build wealth with real estate when you lack the time and energy? Leave that to the GrowthView Properties. The GrowthView team finds, negotiates, and manages multifamily assets for private investors. Their mission is to help investors secure the ultimate asset, which is time, all the while impacting the greater good with their endowment fund that fuels the mission of charitable organizations. Find out more by going to thegrowthview.com. That's view with a VUE.com. Put your money to work so you don't have to at thegrowthview.com. Yep. He's becoming the bank, right? So he's just collecting, a steady paycheck every month. Yeah, I absolutely love seller financing. It's how I got my first true rental property, was going direct to seller and seller financing. I think total was in the deal for like $3,000. So as a way to invest with low or no money down, seller financing is a great way to get in the game. And just if you know the intricacies of it and the ins and outs of it, you can really present it to the sellers in a way that benefits everybody. Because like you said, usually it's older people looking for stable cash flow, or they want better interest than they would get by having their money in the bank. It's just, finding that motivation and finding
or the
what
taxable
makes
event.
What was that?
Or they don't want the taxable event.
Yeah, exactly. Defers the taxes because it spreads it out in payments rather than one big lump sum. So yeah, there's a lot of benefits to it, and it's a great strategy. So we're talking about this possibly on an 8-unit. So the topic really is multifamily. So there's a lot of strategies within real estate. So I guess why multifamily? Why is that your path and what you've selected to invest in the future?
Yeah, it ultimately comes down to just capital efficiency. There's a lot of efficiencies that come with owning more doors at one address. Like property management, for example, if it's a smaller multifamily and you're self-managing that, it's incredibly efficient to just have it all under one place. It's also faster to getting door count, which I think is incredibly important when you're talking about building a portfolio. If you're buying single family properties, that's a heavy lift. It might take you 15 years to get 15 doors, right? Or you can spend the same amount of attention on a 15 unit and get 15 doors in 1 year, right? So that's one part. Number two, it's about managing your vacancy rate. If I have a single family property and the unit goes vacant, it's 100% vacant.
Yep.
If I have a 10 unit and I lose 2, it's still 80% occupied. And that's important when you're just looking at, the economics of the deal. I think we talked a little bit about Colorado, coming up over the last 10 years. And people always say stuff like, it's Colorado or it's Fort Collins. It's just, look, you just buy it and you hold on to it. And that is a terribly risky game to play, because people say the same crap about the stock market. And there's a saying in the stock market that every stock trader knows is, everybody's a genius in a bull market, which means for the last 10 years, you could have went and thrown a dart at something and theoretically been successful. Anywhere in the country, you could have bought something and been successful. That's not what ultimately matters. What really matters is when shit hits the fan, like COVID, how do your properties hold up? What's the durability of that asset class? So if I have more doors under one address, I ultimately have better scale. And so for me, multifamily just offers that, right? It's a way to get access to safer and more consistent returns, and it's a way for me to control my risk.
Yeah, really good point. So I think you broke it down into efficiency and risk management, right? You have the economies of scale. You got a bunch of units, one roof. They all got the same, AC units or fixtures or whatever, right? So you have a lot of commonalities, and it's easier to upkeep. And then risk because you're protected with vacancy. So once you choose multifamily and you realize these kind of, benefits with this asset class, where do you go next, right? Where do you go to learn, and where do you find out about how to enter into this asset class?
The way that it was always presented to me, and this goes with anything, but number one, you're either born into it, right? So you're in a family of real estate investors who get it. Your parents are syndicators, or they own a bunch of real estate or something like that. Number two, you spend 7 to 10 years working in the industry. So maybe you're a real estate agent, or you're a mortgage broker, or maybe you're working in larger scale, like Fannie Freddie type loans. Or you bang your head against the table, right? Or the fourth way is you find a mentor. When I started out, I used knowledge that I had from working in the industry of investing, and then invested heavily in books and invested heavily in podcasts until I felt confident enough to pull the trigger. And then it's a matter of going out there and, banging the table, calling banks and trying to understand it. I think one of the misconceptions that people have is how they think things should work, and then how they actually work. And so you have to break this conventional thinking that, like, I have to come up with the down payment. I have to get a loan. We just talked about seller financing, right?
Yeah.
There's multiple ways that you can do that. So that's kind of like step one. And then along the way, I just found people who were doing it better than I was, or who were further along in their path, and just pick their brain, try to learn from their successes, right? Success leaves clues. And then ultimately, as it relates to getting into large commercial multifamily, I just went and found a mentor and paid them to teach me everything that they know. We spent a good deal of money to go to school and get, general education, right? Mm-hmm. But to get that specific education, why wouldn't you spend the money to go do that? So.
Yeah, that's a really good point, right? Like you said you'd paid money for go to college, but if you want to be successful in real estate and get properties and all that, why not spend a little bit on your education beforehand? Because like you're just saying, you're going to, take lessons away from others' experience with those mentors, right? You don't have to make all the same mistakes. You can flatten your learning curve by finding mentors or partnering up, things like that. And in this case, you started with paid mentorship. How would you recommend somebody goes about finding a mentor, or finding the right program to buy into, right? To avoid, the guru seminar that's going to waste their money and max out a credit card to get one piece of advice out of it, rather than, something actionable.
I actually think all that stuff is valuable. It just has to have context, right? So I call it the playground mindset. When you're a little kid, right? You show up to the playground and all these kids are playing this game. You've never played this game, but everybody looks like they're having a really good time. So the very first move you do is you just sit back and you kind of watch and you study and you learn, right? So that would be like listening to podcasts, jumping on blogs, reading, studying the game. That would be your step one. Then the next thing you do is you got to actually like get out there and play a little. Like you have to try it. You have to go and do it yourself. So you might go to a seminar where they're teaching you some specific skills and around like how to go do it. At that seminar, you might meet somebody that you can partner with to do it, or you might take those skills and just go dabble a little bit. I think that's super important, right? And so it's just like you're on the playground and you got in the game. You don't really know the rules yet, but you're kind of figuring it out, right?
Taking action, yeah.
Yeah, and then finally, like after you played a little bit, you start to go, okay, what's the rules, right? Like I understand it a little bit more. Now, how do I get better at the game? And once you figure out what you actually want to do within real estate, then it'd be time to go looking for a mentor, because people spend a lot of money, chasing the weekend course, thinking that all of a sudden, poof, that's going to give them all the secret sauce that they need in order to go do it. There's a lot that happens between getting the knowledge and like executing the business plan. And so some of that, is going to come from mentorship. Some of it's going to come from doing it, and some of it's going to come from figuring out what you want to do. Do you want to do mobile homes? Do you want to do multifamily? Do you want to do fix and flips? Maybe you just want to be a real estate agent. Sometimes people need different paths in order to get there, to feel confident enough to go and execute on that stuff. In terms of finding a guru or the right kind of mentor, I don't know if I have that answer. I think for me, it just comes down to knowing what I was looking for, Mm-hmm. If basically how I found my mentor is I was writing a business plan, right? I was going to go do it regardless. Then I started seeking out other organizations that were doing it the way that I wanted to do it. And then I found them, and then was going to actually go and invest with them passively, and then actually learn that they had other opportunities for me to go and learn from them on the active side, which was ultimately what I was after in the first place, right? So I could take 50 grand and invest it into a deal, right? Or I could take 50 grand and I could invest it into getting all the knowledge that they had for the next year, right? I would much rather do that. That's not for everybody. I think some people just need to be passive investors.
Yeah. And what it comes out to ultimately, I think you said it perfectly, right? You found the group that had your interest aligned, right? You found what you were looking for because you already knew. You'd already done the upfront research and the self-education, that step one,
Right.
like you're talking about with the podcasts and the books, right? You got to have some kind of foundation. You can't just pay money and expect to figure it out, right? I think having a path in your head, right, and having some kind of destination in your mind is important before you jump. And then step two, right? You'd taken action before. You've done real estate deals. You've closed deals. So you've got experience in the game, active investor. The next step was, finding the mentor that was right for you. And there's going to be a lot of different mentors for different people, depending on your strategy. So I think that is all really good advice for somebody looking for, to get the right kind of education before, jumping and, spending a bunch of money that they'll never get back. That it turned out it was a bad purchase because they didn't know what they wanted first.
Yeah. There's a ton of ways you can do it. I mean, if I could go back and was thinking about it all over again, my very first house, I would have bought it and I would have house hacked it, right? I would have had roommates and just rented it out. So if I was young or single, like I would have done that all day. But, I was talking to a friend right before this, and, he has a 3,700 square foot house with 1,500 square feet in the back that he rents out, right? So his mortgage is like $2,000, but he rents the back for $1,000, right? So that's a great way to learn. Or buy a duplex, live in one half and rent out the other. There's a million ways to make $1 million in real estate. You just have to figure out what your way is. I think that it's important when you step into, getting into the business, you need to have a strategy that you're like, okay, I feel comfortable and confident in this process or this system, and this is what I want to do. And then also there's a difference between investing in real estate and then being in the business of real estate. Flipping houses, that's the business of real estate. Selling real estate, that's the business of real estate, right? Putting together syndicated projects, that's the business of real estate. You're an active investor, right? So if you want to truly be an investor, then, define if you want to be passive or active. And I think that that's crucial for people to get their head wrapped around. I'm an entrepreneur, so I like to get my hands dirty. That's fun to me. Now, do I deploy capital with other people? Sure. But for me, I love the game of, like we talked about, find the deal, find the money, find the debt, and put it all together and negotiate through it. I'm actually working on a land deal right now. And that's the strategy, right? We have the land. We're trying to figure out what the farmer who's selling this land really wants. Simultaneously, you're dealing with the broker in the middle of that who wants a commission, but simultaneously is trying to, guide him through it.
Yep.
Then it's completely raw, unannexed land. So trying to get the land and change the use of it when it's a non-cash producing asset. Like there's not very many lenders that would come lend on that. So you have to find a special kind of lender, which is an asset-based lender. Then we have to go and try to negotiate with the seller to say, hey, if you carry 50%, I can get you the other 50% of the money, but you're not going to get the other 50% until like 18 months from now when we sell out of that, right? So then I have to go find the rest of the money to put it through entitlement, to pay the interest-only payments, right? And to make sure that we have enough money in the bank to get this project all the way over the line to get it to the other side. Meanwhile, we have a builder lined up on the other end of that who gave us an LOI for 90 of the lots that we're getting ready to sell, and he's going to give us $150,000. So if I can shore up all of those pieces and then go to the bank and say, listen, I have an LOI for 90 lots to be sold on the other side. Hey, Mr. Seller, I have 90 lots sold on the other side. You carry 50. I got 50% that's lined up. Then I go to an investor and I say, we need $1 million. Here's how we're going to use that money. And here's what that means for you. It gets a whole heck of a lot easier, right? But I didn't wake up yesterday and go, you know what? I think I'm gonna put together a land deal. I mean, this is 13 years of experience, right?
Yeah.
And I've surrounded myself with other key players, and this is a key tip too. You don't have to have all the knowledge. My partner on this deal is a 35-year civil engineer. The guy's done every kind of development you can ever imagine. So when it comes to water rights, when it comes to entitlement lots, I don't know shit from balloons about that stuff, right? But he does, right? But when it comes to putting together the team and finding the money and just being resourceful, well, that's my superpower, right? So we come together and we all go, and everybody benefits from this. And a lot of the things that you're going to learn about real estate is this isn't an individual sport. It's a team sport. And the better your team is, the more successful you're going to be and the quicker you can move.
Yeah, I want to get into that right now, actually. But real quick, you mentioned like a really key difference between active investing and passive investing, right? And that goes back to your goals, which we were talking about earlier. I did a podcast a few episodes back with Marcus Long, and we dove really deep into what's active investing, what's passive investing, the differences, and finding what you want in the investments to guide you through that. So definitely check that out. But what you were just saying, investing in multifamily is very much a team sport. Real estate in general is a team sport, right? Because it's a very dynamic business where, depending on your strategy, you're putting together different players and financing methods and different ways of structuring the deal, like you were talking about. So how'd you go about building your team or the team for GrowthView and really put everybody together to be at its highest and best use?
Yeah, my skill set personally is just an organizational leadership. So I've spent most of my career building different departments within a large technology company. And so finding people and putting people in the right seats and empowering them to do what they do best is definitely a skill set. Examples would include, I can underwrite, not my favorite thing to do in the world, right? Capable, competent, can do it. Do I get geeked out about spreadsheets? No, I get geeked out about this stuff, right? Asset management, can do it, right? But do I love it? Like, is it the thing that I'm anal retentive about, the details of every single thing that's going on in the spreadsheet? Not so much, right? Not my superpower, right? Back office, like chief financial officer stuff, can do it. Not my favorite skill set. My skill set is speaking with people, organizing other people, raising capital, sales. That's my skill set. So when you're thinking about building a team, I'm just thinking about, what am I not good at or not the best at, right? And how do I backfill that? When it came to the team for GrowthView, this was just a matter of the right kind of people who were all on the same path. We were a part of this mastermind, all on this path towards syndicating large commercial multifamily. We got to know each other over the course of the year. Our goals aligned, our values aligned. And so because of that, I said, why are we doing this separately? Like, why aren't we just doing this together? And they all kind of they all kind of just asked the same question, right? It's like, if we're all running in the same direction, why don't we just go win together? And so I approached Jeremy and Rick first about the idea, and they loved it. And then I approached our other partner, Matt Bryson, who works with me at my technology company, comes from private equity, has a ton of experience in just finance and investing in general. And then met Brad and Nate on that same group and that same path. And then Brad knew you from Florida, and he said, this is a guy we want on our inner circle, right? He's just like us. He's an athlete. He's competitive. He's hustling. He's doing everything that we look for: humble, hungry, smart, gritty, competitive. Like, I can't teach you to be those things. You either are those things or you're not those things. And so that's how people just kind of come into the fold. And then, if you build the right kind of company with the right kind of core values, then those people go find other people that come be a part of the group. And that's how we know each other, And so as soon as Brad was like, hey, you got to meet Blake, it was like instant credibility, right?
Yeah, that's great. Definitely glad to be a part of the team and, provide my piece. So you mentioned all the different people of the team, and I think it's be important to talk about, like, what positions you need on your multifamily team if you're going to really, scale it out and make it into a business, and kind of, within growth view, what those positions are?
Yeah, I mean, I think you can be very lean. You can have a good finance guy who also happens to be a good asset management guy, right? And he's working with brokers and doing the underwriting and managing the assets. And then the other side of the house would be somebody who's more like the CEO or the president, who's also raising capital. I mean, it could be a two-man shop, right? For the type of scale that we're going for, you need to get real specialized. Every business has like three core functions. You got sales and marketing, you got the actual operations, and then you got the back office. So if you kind of start there and kind of build the team as you go, obviously the two most important pieces, if you're trying to syndicate, meaning raising capital and using other people's money, then you need somebody focused on, or people focused on, raising capital. But then simultaneously, you got to be working the other end of that spectrum, which is finding the deals. So you got to have somebody that's working with brokers. And then as the deal comes in, you have to, somebody has to underwrite it and make sure it fits in the box, right? So it would be incredibly challenging, in my personal opinion, to be raising capital full time, simultaneously working with brokers all the time, simultaneously underwriting all the deals all the time, simultaneously calling the PMs all the time, and bringing it all together, at least at this size and scale, especially if you're doing, let's just say you're getting 100 deals a month, right? So you're looking at 1,200 deals a year. That's a lot. And unless you're doing it full time all the time, that's going to be incredibly challenging to keep up with. So I think, it's a little bit different for each person depending on the size and the scale of how they're trying to build their team. But if you start with the end in mind, thinking more about where you want to go, that might kind of grow over time. You might start a little bit smaller and then scale up.
Yeah. That's really good. Because you don't have to, if you're just getting into this, right, you don't have to have, a 6-person group to go knock down a multifamily deal. So don't think that. But as you grow and scale, and right, you're looking at, like we are 100 plus unit apartment complexes, it becomes necessary just based on the size of these deals, the underwriting procedures, and then the broker relations that it entails to get those deals, and then the capital it takes to close those deals. But if you're just starting out, right, take it from me. Don't try to do everything yourself, because you pretty quickly, hit the wall of your time and ability, right? I was underwriting, I was finding deals, talking to brokers, talking to my network about raising capital to put it all together. And it's just, it can be exhausting, really. Like I was just one man show.
And also full time in the military.
Yeah.
Too.
And also a full-time active duty contracting officer. Doing all that, right. It can be tough, right? And this is how most people start, right? You're still working your job, and I'm doing mine, and that's how most people start, right? So it's how do you balance your time to do all this efficiently? And the answer is, build your team, whether that's one person. A lot of the times you see, somebody that's like you or like me, really good with people, maybe better with systems. And then you have like the analytical side of that, and that partnership pairs really well. So that's a good way to get started. But yeah,
I think your value set needs to line too, right? You need to make sure that like people are there for the right reasons. Because ultimately, like partnerships, especially with a lot of this stuff, like these types of deals are, 5, 7, 10 years long. So these relationships are going to be there for a long time. So you better make sure the people you're working with are people that you like. So a good way to get started is, if there's a common interest there, to say, hey, let's go work on some of these deals together and see how that kind of progresses before you just decide, hey, let's go structure a company and get into bed together, right? Because you can't really go back from that. But each one of these deals is its own business transaction. So this apartment could have its own LLC, and that one could have its own LLC. So maybe you go through this first deal together and you realize that it wasn't great. So you decide, we're not going to do another deal together. Awesome, right? Now you don't have this company that you guys own together that you need to unwind that also owns that. Don't structure it that way.
Yeah, that's a good point, right? I always think of like, treat it like a marriage. Like my wife and I, we dated for, I think 5 years. I don't know. She'd hit me right now if I got that wrong, but I think we dated for 5 years before we, got engaged and got married, right? Take it take it in steps, right? Like don't make that first deal, the marriage at the altar, right? And you're signing your life away. Just lay out lay the blanket out at the park, right? Go on a date and get that first deal
Break
done.
some cheese. Yeah.
Exactly. Yeah. Go to the movies together and do underwrite some properties. Yeah, you definitely want to find, the people with values that align. Cause right, when you're thinking long-term, multifamily properties are usually a longer term buy and hold strategy, overall. So you definitely want to have the people in place that fit that model, right? You don't want
100%.
iffy people that are in and out.
Yeah.
But yeah, good discussion on team. I'm glad we hit that, and I know that's one of your superpowers. One of them among many. I hear bench press as one of your other superpowers.
Well, at least when you and I are competing.
Oh shoot! Hey, we just got the home gym at the
Oh yeah,
place.
get on it.
I'm gonna get the number up.
You're not 240 anymore, buddy.
What's that?
You're like $195 these days. You're not
soaking wet, man. From my playing days at 230, definitely and not in my peak shape. That was the reason behind getting the home gym. When all the gyms shut down, I was like, man, I got to put some weight on, get fit, and get some meat on my bones. Goodness gracious.
Well, plus you've been burning the candle at both ends. So that doesn't.
Yeah, no kidding. So, in this multifamily discussion, I guess it would be a good topic to transition to. Why now for multifamily with COVID going on and all the unrest? Why is multifamily still a good thing to get into, do you think?
So in my personal opinion, nobody needs their own home, but everybody needs a place to live. Maslow's hierarchy of needs: food, shelter, and water. Owning your own home, well, that's a desire, but having a roof over your head, that's a need. And so multifamily, the majority of people that are there, right, they need to rent. They don't have a choice. So even during coronavirus, the collections for rents on these, where we like to buy that B grade commercial multifamily, those have been incredibly high. They have been collecting rents, no problem. You'll see quickly, in any kind of economic downturn, the high end stuff like the A-class properties, they'll kind of have some fallout, meaning people that are living there are living maybe a little bit further beyond their means. And so as soon as things get tough and they need to tighten up the purse strings, they'll kind of fall into the B grade. You'll even see some of that from the B grade down to the C grade apartments. And that'll happen. But if you're in the bottom middle of the market, you're kind of like in the sweet spot. You're with the people who are the good blue collar workforce housing. They need a place to rent. They need a place to live. They have a decent job for the most part. Not to say that C class and D class stuff isn't important, but it's just a risk. Beyond the economy, your tenant and vacancy is your second biggest risk factor. So for us, housing is not going anywhere. Technology hasn't really disrupted it. It's probably even enhanced it, right? People are working from home more than ever. So that means as landlords, we need to make sure that the product that we're putting out for our customers, i.e. our tenants, is top notch, right? So when you come into a unit and it's, upgraded to the market, that matters to people, right? If they're comparing this where they're going to be spending, let's call it 8 hours a day, to the one down the street, that matters, right?
Yeah.
So no time like the present.
Yeah, it's and also through, COVID, all the shelter in place, where are those people sheltering, right?
Yeah.
In their apartment units, right? That's the last thing that they're, not paying for, or else they're going to be on the street. And yeah, there's moratoriums with evictions and stuff like that, but still overall what we've seen is good as time as ever to jump in, because
I think it's better than ever because people are terrified right now at those moratoriums, right? Government's been doing this forever. Like, look at rent caps and markets, right? People are still owning real estate and making money there, right?
Mm-hmm. Now housing supply is so low too. Also, you're seeing people that just can't buy because they can't find anything on the market, so they're staying renters.
100%. We live in a capitalist society, which means the government relies on its people to create jobs and to create housing for people. Period. End of story, right? And so the government needs us as capitalists to continue to provide housing to people. We can get into a whole diatribe about where we're at with our economy currently, which I think is a different topic for a different day.
Yeah.
But as an investor, you look at that and you go, okay, well, not only am I providing something good to the market, but also I'm offsetting the risk of inflation. Like as the government continues to print more and more money, things are going to get more and more expensive, right? So the only way for me to offset that cost burden is to pass that off to somebody else. It's just like if you look at the median home price in 1987, it was around $87,000, right? Median home price today is $267,000, right? So 40 years later, right? Almost 33 years later, right? That is nearly tripled what it was, right? How is that possible? It's because we've continued to print more and more money and things have gotten more and more expensive, right? The cost of living has continued to go up. So that's how we make money. That's how we offset our inflation burden. And that's just kind of the way the game is played. As long as the government's going to continue to just keep printing money, we have to find ways to offset our risk.
Yeah. So recap, multifamily has historically always been a good investment class to get into, and now is still, if not, one of the best times.
Inflation's here; it's still going. So if you're looking for a way to protect yourself against that, then you better be looking for ways to put your money into hard assets.
Yeah, absolutely. So we haven't dug too deep into COVID affecting the marketplace. I don't want to necessarily do that here, but I think it's a good question to fit into this topic with how have you seen COVID change the market for buyers right now looking to buy multifamily properties?
I think that just pricing initially has been pre-COVID. A seller could get prices that weren't really there from a cap rate standpoint, meaning they were betting. People were buying on the come, meaning they were paying up for these properties. Post-COVID, when you look at what the data from CoStar says, where we're going to have basically, -1 to maybe 1% rent growth over the next 18 months, it's pretty hard to sell me on the fact that, you're selling this property at a 4 cap and what is probably a 5 or 6 cap market, and then I'm somehow going to magically be able to drive the rents up. I think that that's a tougher sell right now. So it's been kind of weird waiting for the price to kind of move back to normalization. You see this happen more real time in the stock market, right? Because those markets are super liquid and there's thousands of orders going on in the stock market. So you'll see the bid and the ask get really wide and then they'll kind of like come together and then the trade happens, right? So the same thing happens in the real estate market. It's just much slower. Like it's like watching paint dry sometimes. It can take
it
can take 8 to 18 months.
More stability in this asset class for sure.
Yeah, so it can take 8 to 18 months for that stuff to kind of hit, which is also good though because it's not instantaneous, right? The stock market fell 30%, right, and people lost hundreds of thousands of dollars in a couple of weeks. In the real estate market, by the time that kind of starts to hit the market, the economy is kind of correcting already, and so it's not as drastic. So that has pros and cons to it, but I think that's the biggest challenge right now is just being patient on pricing and just being incredibly aggressive with your underwriting. When I say aggressive, in my mind, it means conservative, right? Like you're preparing for the worst case scenario, and that's going to price you out of a lot of deals, right? So,
yeah, but also, I think that's important when you're starting, right? You want to err on the side of being conservative starting out, right? Because you don't want your first deal to be your last deal, right? So you're conservative when you get in, and you underwrite for the worst case scenario, right? And it still works, and you do that deal. The worst case scenario may come, but you're prepared for it.
Yep.
But if it doesn't, if you hit middle of the road average, you're outperforming, right? So I think conservative only plays to your advantage if that's how you're looking at deals.
You'll see people get super excited and try to force it. It's confirmation bias. They want the deal to work. They want it to happen. It looks good. They're excited about me, and they'll push it and they'll force it. Not the best strategy, because ultimately, when it happens, not if it happens, when there's some sort of economic correction, you're going to get bent. I'll never forget in 2008, 2009, I had a customer. He traded like $500,000 with me or something like that. I can't even remember. And what ultimately ended up happening is he pegged the stock market bottom by like 2 days, but he levered up like crazy. He bought I'll never forget it, three S&P mini contracts, and he got put on margin call, which basically just means you have, a couple of options. You can sell some of your position, you can fund the account, right? Or we're going to do that for you, basically. And so he got so scared and so freaked out by it because he didn't have a risk management strategy when he got into it. He just got into it thinking like, oh, I'm just going to hold it. This is the bottom. It's like, well, what if it's not? What if the market drops another 10%? Then what do you do, right? There was no strategy there. It was all this gut check feeling stuff. And the byproduct of that is the day he got out, it was like the third day of his margin call, he sold everything. The market made a low, and it never, ever made another new low and went back up to where it is today.
So, which is near all-time highs.
Yeah. So there's nothing wrong with risk. You just have to be aware of it, and you have to address it, and you have to assess it constantly. And it's the best thing that ever could have happened to me was trading highly leveraged futures and commodities, because one of the reasons why you'll hear me advocate for being patient with turning units is because if I go in there and I have 100 units and I flip them all in the first 90 days, which wouldn't really be possible, but let's just say I did, and then COVID hits and you were expecting to bump rents on the back of all of that, you're screwed, right? But if I play it out over the course of, say, 3 years, where I turn about a third of the units per year, I'm always kind of staying on pace with the market. I'm never having too much exposure at one time. I'm never putting too much capital expenditure into the product and waiting for or anticipating the market to go up. I'm saying it might not, and if it does, I'm okay. I still have all this cash sitting on the sidelines, right? So that type of strategy, ultimately, the long term, is what makes you successful. But if you're just going in it and you're just trying to like turn and burn and get the biggest pop out of every single deal, the bigger the potential reward, the bigger the risk, and it's only a matter of time before you get burned.
Yeah, exactly. And guys like us, we get in this for long-term wealth building, right? It's not for me anyway, I know it's not for you either. It's not a get rich quick scheme, right? It's not, flipping 100+ unit apartment complexes. It's, balancing risk and preservation of capital, number one thing, right? And then, good returns come after that. Because if you don't lose, you can hold and cash flow through it, essentially. So that's a great point. Yeah. So I guess transitioning into that, we mentioned turning units. You're a value add investor. I'm a value add investor just by trade. And that's growth view strategy is light value add, bumping rents. How have you seen that change in the marketplaces, as far as implementing that value add strategy goes? I think you touched on it a little bit, but I think it's worth a dive into it.
Yeah, I think you just need to delay your business plan a little bit. Unless, of course, you're buying something that's heavy value add. And, no matter what you're doing, you're always just looking for the delta. So what's the opportunity for me to, add some value? Is it just bringing the rents to market? If I'm stepping into the property and all of the rents are below market, and my strategy is the very first thing that I'm going to do is just simply bump the rents and get them closer to market, well, that strategy could work pretty good, right? But if I'm going into it and all the rents are at market and the only way for me to make money is to step in and force the rent to grow through some sort of heavy value add type of strategy, that's going to be a harder sell, right? That being said, there's also something to be said for just good dirt. There is something to be said for a momentum play. So our thesis has always been that the market where you buy and the sub-market where you buy, which has low violent crime, good schools, and good income, will outweigh everything else. Bless you.
Thanks. I had a rogue sneeze there.
Yeah, will outweigh everything else if the world kind of melts down, right? And so right now, if you can find a really good property that's, in a really good area and desirable area where people want to live, and you're talking about now people have to make a decision about working from home, right? And they're being more picky about how they're spending their money. I believe that a good piece of dirt in a really strong market, in a really strong sub-market with good jobs and good schools and low violent crime, long-term is going to be a winner. But finding those, you just got to be patient. And then when you see them, you got to be willing to do the work. And you might even have to pay a little bit more for those properties. But again, this is the long game. We're talking about 10 years, right?
Yeah, absolutely. Location is so important. Like I can't hammer that home enough. Like the location you buy, you're buying the location as much as you are the asset, right? So you got to make sure that value add strategy fits with the location, that the market, that immediate area will bear the value add, right? So that all important things to consider when you're looking at properties and looking at areas to invest. So I'm glad you brought that up. So once you have kind of the know-how, we started at the beginning talking about, education, how you get started. Then you have the team and the strategy. What are some actionable steps that you can take to go execute and get that first deal?
I think it's important to just write your business plan. I think that's step one. As part of your business plan, how you're going to source deals is a pretty vital piece of that strategy. There's really like three components that you need to get a deal done. The deal delta. I didn't make this up, but it comes from Brandon Turner with Bigger Pockets. He talks about the deal delta, right? So you have knowledge, hustle, and capital. Those are the three things you need in order to make a deal done. Usually you have two, but not the third, right? So if you have the knowledge and you have the hustle, like you do as a prime example, right? You can go find the money, right? So knowledge would be just what we talked about at the very beginning, like just getting educated, finding a mentor, dabbling a little bit and making sure you're understanding what you're actually doing. And then it's just hustle. Like, do you actually want to get out there and get it? Like I told you, we've been flipping mobile homes. I got this young little hustler, I call him. His name's Alonzo. He's 21 years old. He's in college still. He came to me with a business plan of how he's going to start buying and flipping mobile homes, but he didn't have any money. But the kid's got crazy hustle. He doesn't have a job. He'll drive to your house. Let's say you were giving a couch away for free. He'd come pick it up, and then he would turn around and sell it for like $300, right? That's hustle, right? I can't teach
like the
you.
definition of hustle right there.
Yeah.
Selling couches, selling used couches.
Like $1,000 a month doing that, right? Now we're helping him with this mobile homing flipping business, and he made, on his first deal, he made like $7,000, right? So you can have those two things. There's so much money out there, more money than you could ever imagine. Money's going to flow to knowledge and competence, right? So you got to go find the money on the back of that.
Yeah.
So it gets a lot easier when you have that business plan and you have that education to feel confident going out there and asking somebody for, a couple $100,000 to invest in your deal.
Yeah. Yeah. That's a huge point. I think of it like a triangle, right? What you're saying about the deal delta, or like a truss, right? Like a load bearing truss. Like if you lose one of those arms, the whole structure is going to fall, right? You got to have the knowledge, hustle, and the money. You don't have to bring all of them. But know what you're good at, which we, talked about with the discussion on team. Yep. Find, leverage your strengths, find the people you can align with that have the other pieces, and go knock down deals, right? Then it's just analyzing deals, filling your funnel, getting deal flow, and analyzing, putting out offers. I love that. Super good advice.
Once you get your team built and your system built, it's all sales and marketing at that point.
Yep. That's actually a really good transition point, because I wanted to hit on the marketing piece, specifically the digital marketing piece, because with syndication, right, you're out looking for deals, but raising money, and a big way to do that is to go out there, network, use social media, digital marketing, to get in front of the right people, right? The people that fit your investment strategy. So can you speak to how you leverage digital marketing to, grow GrowthView?
Yeah. So I've spent the last 10 years, my full-time gig was leading strategy for a marketing and technology company that's focused specifically on helping small businesses. And so I've poked my head inside of a couple thousand businesses at this point and seen, all the trials and failures of these businesses as it relates to marketing. And I think the big mistake that most people make is they want to jump head first into all the cool stuff, like paid ads on social and paid ads on Google search and stuff like that. I think of it a lot like building a house. So if we're going to build a house, the very first thing we're going to do on this raw piece of dirt is we're going to dig a big ass hole and we're going to put a bunch of concrete in it. It's not very sexy. Yeah, it is not very sexy. You still can't live in it, but it is vital to building your house. So instead of talking about marble countertops, let's talk about the foundation. So your very first thing is your brand, right? How do you show up in the marketplace? If you're going to sit down and talk to an investor, you better look like you've been there before. That's number one. So what's your brand? How do you show up? How do you present yourself? Once you get that dialed, then you can build your website, business cards, put together your collateral, and that's your starting point, right? And it's the grassroots movement of getting out there and banging the table and getting to connect with people. Don't just jump in and think you're going to start running paid ads and all of a sudden people are just going to start handing you money. It doesn't work. Yeah. Plus, you need to cut your teeth and start to build your pitch and understand how you're communicating what you're doing, right? What's your market approach and capability, right? Why would somebody invest with you over somebody else? And be able to articulate it cleanly and clearly and simply. That's kind of like phase one, right? And if you can do that and you can get everybody on your team to start sharing and shaping content, you start to show the market that you're there. So there's this rule in technology, we use it, but it applies to pretty much everything. It's called the law of diffusion of innovation. And it's simply just a bell curve. There's a great book by Jeffrey Moore called Crossing the Chasm that talks specifically about that. So in any given market, about 2.5% of the market is your innovators, right? So that's people like us, right? The people who decided to start this business. 13.5% of the population are your early adopters. So those are the people that are perfectly comfortable making decisions based off of what they believe. So the very first key is to find the people who believe what you believe and align yourself with them, and or find those people as investors. The next piece in the book, Crossing the Chasm, getting from 13% and breaking into the early majority, the 34% that kind of like make up the first part of the mass market. They won't try something until somebody else has done it first, right? So if you can find the 13.5% of the population and you can really build this tribe, then they will tell other people who believe what they believe, and then all of a sudden more people will be a part of your group, right? So when we talked about building the team, well, I surrounded myself with people who believe what I believe. And then they brought people who believe what they believe. And then within that network, we're all going out and looking for people who believe what we believe and growing our investor base, right? Once you have that, now you can go jump into the deep end, right? Now it's about taking the time and doing what we're doing, pushing podcasts, jumping on to different platforms, doing sponsored posts and paid advertisements and stuff like that, you know? But there's a lot of stuff that happens in between that, including some of the other beginning things you should do is like having your CRM set up, having email automation set up, having branded emails set up, making sure your email signatures are dialed, making sure your social profiles are set up, making sure that everybody who's on social is connected and all a part of that same organization. Like those seem so small and so minor, but at the end of the day, they impact how you show up in the marketplace and how much reach you ultimately have. Once all that stuff's ready to go, now you're ready to go play the game. You know, you and I play college football, right? You don't show up like September 1st and say, Coach, I'm ready, put me in, right? No, you've trained all summer, and then you go through 2 weeks of grueling hell to be prepared for that first game, right?
Yep. Love August camp and 2-a-days, the grind. You never really get to wash the sweat and the dirt off before you're out there again. Man, that is such a good analogy for hitting the ground and beginning marketing. And at the first, it doesn't even seem like marketing, right? Like when you break it down to its core element, it's just, it starts, the foundation is your personal brand. Like, who is Samson? Who is Blake? Who's Joe? Who's John? Like, who is that person? Do you know, like, and trust that person? Like, when I think of, somebody that you're going to invest money with, like, what's that person's personal brand? Are they out, at the club on Friday night, freaking partying it up, like not caring about like the deal they got working, or are they, doing things that are, a steward of their investors' money? So that's, a huge point right there. And then, from then find those whose goals aligned, find those who believe what you believe in, like you put it perfectly. And then comes like all that extra stuff, right? You don't have to be fancy with it right off the bat, right? And it's not, when you get to that point, it's not smoke and mirrors, right? It's transparency, tying back to your personal brand. And I think it should all be aligned. And that's kind of my goal with the Multifamily Journey brand is, a look into me and my journey in real estate and getting other investors that are, transparent with their path and their progress to provide value to others, right? There's no
100%.
no sales pitch. It's just, providing value. And that's how it starts with, when you market. And man, I think you said it perfectly. That was really good. Man, there's a few, really one more thing I want to get to, before we wrap this thing up. And that is what you do a really good job of motivating all of us, but what motivates, what drives you, and what pushes you through all those hard times. I think, there's a lot of things to say, oh, it's too hard. I can't do this. I don't have, the right people. I don't have the team yet. Like, what motivates you to put all that together and drive this business forward?
I have an incredible wife and two really beautiful, amazing, smart, talented little girls. And for me, the journey, like I alluded to earlier, I come from a family that doesn't have money, didn't come from money. Nobody handed me a check and said, start your career, your business. So being able to leave a legacy for them financially is something that's super important to me. But legacy is also something that I think about a lot. Like, I'm less concerned about how much money I make and more concerned with how many people show up to my funeral. And what I mean by that is, there's a lot of people, this world will do a lot to beat you down and tell you you're not good enough, you're not capable enough, you can't do it, look where you came from, that, somebody's holding you back, some mythical force is holding you down. Because let's face it, man, building something is so hard. It takes a lot of work, which is why haters exist, right? Because it's so much easier to tear people down than it is to build them up.
Absolutely.
But what keeps me going beyond just, providing for my family and leaving a financial legacy is when people look at my life and they see me and they know my story and they know where I came from and they say, if that dude can do it, so can I. That's what motivates me. So when I decided to, switch from physiology and get into, futures and commodities, people are like, dude, what are you doing? You just spent 5 years going to school. Like, we're going to go into, physiology and strength and conditioning. What are you doing? I don't know. Why not? Right. Like, I think that there's something to be said for doing the unexpected. Like, for example, my dad, when he was 13 years old, his mom died and his dad walked out. And the IRS came and took everything. My dad slept in the park, right? He had nowhere to live. He had no friends to go to. And nobody would have blamed him if he turned out like any other kid whose mom died and dad walked out and grew up on the streets, right? He could have sold drugs. He could have been into everything, which he did some of that just to survive. But that would have been expected. That would have been the expected thing to do. And he did the exact opposite of that, right? So we have reduced ourselves to believe, we've confused greatness and famous, right? To me, like, if you're 6'7" and you can D up everybody on the basketball court, like, okay, you're good. You should, right? Like, that's expected, right? That's not very impressive to me, right? But being the dude who comes from nothing and to make something for your life, well, that's incredibly impressive, right? So for me, that's what it's about. Like, I do better when I'm the underdog, when I got a chip on my shoulder. When somebody says you can't. When I left, I'll leave you with this. When I left University of Western New Mexico, I walked into my coach's office after my sophomore year, and I said, this has been an incredible opportunity. I've loved playing for you. Thank you for everything that you've done for me. It's been a blessing, but I'm not coming back next year. I'm going to go walk on at the University of Colorado. And he could have said anything, but he made the fatal mistake to say, well, son, I don't think that you're going to play. And I got up and shook his hand.
It motivated you.
And I said, you can watch me on Saturdays, and I never look back, and I left, right?
Yeah.
So that's just kind of how I'm wired, it's just to kind of do the exact opposite of what everybody thinks is safe.
Yep. Yeah. I'm the same way. Like I almost hope like there's somebody out there that's like, you can't do it. Cause then, I love to prove people wrong. Right. It's just, I don't know what it is. I don't know if it's grit or just, just being too damn stubborn to fail. But either way, it sounds like you have the same thing. And I just, I hope our kind of stories, I started very much the same way. And I just hope that our, journey and our story helps lay the foundation, like you're saying, for others to say, hey, if we could do it, you can do it, right? If two meathead football players can be successful in real estate, so
exceptionally good looking meathead
two exceptionally good looking meathead football players can do it, you can do it. And it's just, it's giving people the access to the right kind of information, like you did here today, and really being the portal for them to kind of step into our world and see what's out there, right? Like if you don't, man, there's so much out there to just take, right? Like you were saying, like go out there and make it happen. So I love that. What a good way to end in the show, like the main part here. And we'll go ahead and get into the Fortune 5, the 5 questions at the end here. I just put that name to it, right? Because these are gonna, I think, be some of the most important questions are going to be the 5 questions that I have asked and will ask every investor that comes on. And I think a lot of good information comes from these as well. So first question, the Fortune 5, what's the biggest thing that has contributed to your success?
When I look back on where I developed my relentless mindset, it would be skateboarding. So, I got my first skateboard when I was like 3.5 to 5, somewhere in that realm. I can't even really remember. But I would go out and I would spend hours skating, like hours trying to land one trick, banging my shins, falling, rolled ankles over and over and over and over and over. And then all of a sudden you land it, right? And I think that people don't spend enough time banging their shins and gritting through the pain enough to get to the other side of like landing that first kickflip, and you're like, oh shit, if I do it long enough and hard enough, I can get it. And I've had that taste of it. So it's just a relentless mindset, not to say that it's not hard, not to say that I don't have moments where I'm not feeling, or I feel beat down, or I feel dejected or depressed or unmotivated, right? But even when I'm unmotivated, I'm going to put in 5 minutes, and that's 5 more minutes than the next dude that like is just sitting on the couch playing, World of Warcraft or whatever,
Yep. I love that. I love that so much. We should get shirts that just say relentless.
Relentless. Let's go. I love that. One of my favorite words.
Relentless is a good one. So what's been your biggest mistake so far that's turned into a learning lesson?
Oh man, I got lots of those. Oh, that's a good question. I would say that in college, I was a bouncer. So I told you before this wasn't on the podcast, but I used to work at Abercrombie in college.
Yep.
And I was 240 and none of the clothes actually fit me. And so it was just embarrassing to work there. And
I can picture it. I
had to wear non-Abercrombie clothes, even though that was the corporate standard.
Yeah.
Wearing Abercrombie clothes, because none of them fit me because I was 240 and I had huge legs at the time. So like their size 33 or 34 jeans couldn't fit over my butt. So,
yeah.
But across the street from that was a bar called Stir. And I went there to be a bouncer, and it was the worst and best decision of my life. I had to throw somebody out, and we got into it and almost landed me in jail for 6 years.
Oh man!
Because the district attorney wanted to send a message with me. So the value was, and there's always a way out, even when the situation's like seems grim or bleak. there's always some good that comes out of it on the other side of it. And it made me really grateful for everything that I had, because in the blink of an eye, I had just transferred, given up my scholarship, was working to get back on scholarship, and almost had it all taken away from me. And they sure tried.
Yeah, that's a close call for sure. And at least you look good in the Schmedium Abercrombie and Fitch. They're in that fight.
Looking back on it, I should have stayed there in the extra Schmedium.
Yeah, exactly. Oh, man. So what's your favorite real estate resource you would recommend to someone starting out, whether it's a book, a blog, website, anything?
I think Bigger Pockets puts out some great resources, and all their books are great. If you want to get into rental property investing, there's the book on rental property investing, which I think is good.
Yep, that was one of the first books I read. Super good.
Yeah,
would recommend.
Great. Yeah, I think Rich Dad Poor Dad is good for like the ethereal concepts about how to use money, but it's not very actionable. The book on rental property investing is pretty actionable. It'll just gives you some really good stuff to go and dive into. And then from there is if you just Google search, there's some great places where you can go and learn about what a pro forma is, right? Like how to make financial projections. I think that's important too, is to have a good pro forma. If you're going to go do a fix and flip, you want to, again, talk about what are some of your risks, right? What are your expenses? You don't want to just go in there and wing it. So you can go, I think it's called Adventures in CRE, is a great website where you can go and download some free pro formas. They're phenomenal. The guy that makes them is a financial expert. He's been doing real estate for a really long time. So
what was that website?
It's called Adventures in CRE, commercial real estate, I think. Adventures in CRE.
I'll have to check that one out.
Yeah.
So, outside of rocking Abercrombie and Fitch and smacking people in the hole at football practice and skateboarding, what do you like to do outside of real estate?
I already alluded to, me and my family is amazing. It's the most important thing to me. My wife is my best friend, has been for the last 15 years. We got two awesome little girls who are just getting to that age where they love sports and dance and gymnastics and all that. So we're having a lot of fun doing all that. And then this year, given coronavirus, we're like, man, we need to make sure we're just spending more time together as a family, doing more fun, like adventurous stuff. So we just bought some ski passes. So Colorado, obvious reasons, right? You can get,
got to get my Epic Pass for this year.
Yeah, for like
make a trip out there.
$700, right? You can ski the whole season, which is vital when a mid-season ticket's like $140.
If you're in the military, and you don't know about the military Epic Pass, Google that. 'Cause I think it's like $159 or $169 for all the Vail resorts. So gotten that in the last couple years when I started snowboarding after being done with football, and oh man, so much fun.
Yeah,
wish I would have done it sooner.
I know that, but we didn't want to get hurt, right?
Exactly. Yeah. Our coach, I can remember Coach Getty. if you're out there on the mountain, you're not a pro. So great guy. Respect the heck out of him, but he's very strict, very, very football all the way. But
yeah, one of the other things I do is just, I love to exercise and train. I have a degree in physiology. I have a master's in nutrition, and I actually own a training facility here in Northern Colorado. It's about 7,500 square feet or so. And we have, elite level power lifters, Olympic lifters, bodybuilders, on-staff nutritionists, doctors of physical therapy. So I spend a good deal of time there just taking care of my health and training. It's a good way to kind of start my day and get my head right.
That's where we'll square off at.
That's where we'll do our bench press contest.
Our bench press competition.
But yeah, just training and exercise, taking care of your health. I think those are things that are important.
Love it. Love it. And then finally, the last question of the Fortune 5, where can people find out more about you and connect with you?
LinkedIn is a great resource to connect with me. So just Samson, Samson, Jagoras, Jagoras. There's only one of those. And so the name Samson, there's only like 2,500 of those in the United States. So not that hard to track me down if you really want to. Instagram's a cool spot too. If it's more about investing, LinkedIn's going to be your best resource. If you want to check out some cool content that's going on in my life on a daily basis, from gyms and real estate and all different kinds of stuff that we're doing, that's a good place. You can also go to samsonjagoras.com and or check us out at thegrowthview.com.
There you go. Go check Samson out. Great LinkedIn profile. Actually, used his as a model to build mine. That's good. But Samson, thanks so much for coming on the show tonight. Just absolute value every time I talk. I feel like I learned something. Hopefully the listeners did as well. So just want to extend a sincere thank you. And looking forward to the next growth call.
You bet, brother. I can't wait, man. I'm excited for us this year.
Absolutely, man. Absolutely. All right. Out of
Thanks,
here.
bro. See ya.
Hey, thanks for listening. If you like the show, if you found value in it, please go to iTunes and leave a rating and review. If you want to check out more on your multifamily journey, go to multifamilyjourney.com where you can get free resources to start your journey and figure out your path. That's multifamilyjourney.com. But more importantly, go take action today towards your financial future. See you next time.